Hello and welcome back to Small Market REI. My name is David Dean. They call me Coach, along with my co-host Travis Goodwin. And today's topic is how to finance flips. That's kind of the million dollar question out here all the time. How to get the money? How do we do this? How do we do that? Well, I'm going to start with a disclaimer right off the top is, we're not giving you financial advice. Always consult an attorney or a financial professional, you know, when you're looking to lend money or borrow money or anything like that. So we just want to get that out of the way up front. We're just going to give you some stuff that that we've done through the years, and that seems to be successful. And some of this stuff is just stuff I've seen other people do. And so I thought we would share this information with you today, and maybe you get some value from it, and it may help you. So, the number one people ask me, say, what is the number one secret to success in the investment side of the business or the flip side of the business? What is it? What's the number one thing? Well, there's a lot of things, but I think one of the biggest things is to have a private lender that's willing to work with you. That to me is the sort of the secret sauce to it all. Is you gotta have access to funds. So if you don't have that money yourself, somehow you've got to be able to get it. Okay. And sometimes the traditional banking structure is not the ideal way for an investor to work. Okay. And we'll talk about that in a few minutes. But so what is a private lender? So a private lender basically is just a private individual, um, like myself or whoever's watching this right now, just like you, and you agree to lend money to buy a property or to buy, fix, and flip a property to an investor. And basically, I tell people when I explain it to them is, you're the bank of Travis Goodwin. That's what you are. You're playing bank. So you're going to be the lien holder, the loss payee. You're going to loan out the money, and you're going to expect a return. And people say, what kind of returns? Well, there's all different types of returns, and that's kind of where, you get in trouble if you start talking about returns. But most of them are double digit that I deal with. Okay. So take that for what it's worth. Some people charge points plus double digit interest rates. Some people charge 1 point, 2 points. You say, what's a point? That's 1% or 2% of the loan price. So if you loan 50,000 and you charge 2 points, that's $1,000 up front plus, your interest rate. Okay. 1 point's $500. Just for example. So that is some things that you can do with a private lender, and it doesn't fall under the traditional guidelines of banking, such as having so much of a down payment and meeting debt to income and credit scores and all the different things that traditional banking, uh, has in place for consumer safety. Okay, so to me, that is the number one thing, man. Is outside of a mentor is a private lender. That's probably the number two secret sauce, is having somebody. Now, where do you find those private lenders? Who are those people? Where do they come from? Man, there's a host of different people out there. But just understand this: when you deal with a private lender, you know they're lending on you, not the property. So you have to think to yourself: Am I a man or woman of high moral fiber, character? Will I lose money to pay my lenders? You know, so always remember this: when you do a private money deal, you need to be willing to lose everything to keep from hurting the private lender. So you got to go into it with that mindset. And any problems that comes along in the deal, your lender doesn't know about it because you make sure your private lender is paid. Period. Period. Non-negotiable. If you have to lose $10,000, $20,000 on the deal, that's fine. You pay the private lender because your reputation is most important when it comes to this type of business. And understand that. And if that's not cool with you, don't do it. Stay out of this business. You don't need to be there. Okay. That's that's David Dean's, you know, 2 cents worth. Okay. So where do I find these people? Well, most people start out with family. Okay. That's the obvious place. Do you have family, parents, grandparents, uncle that maybe has some extra money and they're wanting to make a better than, let's say, a certificate deposit or savings account rate of return? Okay. This is a good way to do it. All right. So look to your family first. Look to your friends second. Okay. Maybe you might want to bring them in on the deal. Okay. And what I mean by that is you could pay them a rate of return and give them a piece of the deal. You say, what's a piece of the deal? Well, give them a rate of return and give them 10% of the deal, 10% of the profit, or 15% of the profit. I see some deals that's structured that they lend the money and they take 30% of the deal. You don't pay them an interest rate. You just take a piece of the deal. Okay. So, the sky's the limit when you do these types of deals because there's really, it's just an agreement between you and a private individual. Another way to go about it is hard money lenders out here. Now, I'm set up with a company called Kiavi. They do a lot of flip loans across the country. They're very adept at it. Um, they have programs where they lend you 80% of purchase and rehab costs. So, that might be an option for you. Basically, you're going to have to put some skin in the game. You're going to come up with some down payment money, but they will do purchase and rehab. And they're used to working with the investors all across the country. So, I would take a look at Kiavi. There's another company or two out there, but Kiavi is the one that I have some experience with, that I'm set up with. I don't use them a whole lot because I've got other people, but I have them there in case I ever need to. That's basically is why I got set up with Kiavi years back. Um, and one of the last places to look would be banks. You can go to a traditional bank. If you got a down payment, maybe 10, 15, 20% down, and work through a traditional bank. Now, traditional bank, sometimes it's going to take you a little bit. They're going to want appraisals. They're going to want, some different things from you, and it may take you 45 to 60 days. So if you're buying the property and the people are not in a big hurry, and they're good at giving you 60 days or more to close the property or something, that's fine. You can go to a traditional bank and you can work through the traditional bank, and basically they'll do drawdowns. So, on the money, you can have so much of a drawdown when certain amounts of work is done. Now, when you approach these people, um, to loan you money, just don't walk up and say, I got this great property and I can buy it for this. And I think repair is going to be this and my repairs are this. And people are just going to like kind of give you the deer in headlights, like, okay, but that's not the way you do it. The way you do it is you set up a proposal, purchase price, closing costs, repair costs. This is what I think I will have in it when I'm done. This is what I think it'll sell on the market for. This is my projected profit after real estate commissions and closing costs and so forth. This is my scope of work on the property. This is what I think needs done. This is some comparable sales in the same area, Market Street, that I'm looking to do the property. Okay. Here's an appraisal on it. It has a property inspection. You could have a property inspection done. So what I'm saying is you can put together a packet of information on the property with a lot of these details, with a property inspection, with maybe even an appraisal. Now when I approach family, friends, whoever, I've got a packet of data, and that lets me know if I'm lending to you that you've done the work. You've thought it out. You've run the numbers. You know what's going down. So now that makes me feel a little bit better about handing you my money for any kind of return. because I know that you've taken the time to break all this stuff down. Now, your numbers might not be 100% accurate, but at least we start out with you knowing, you know, what's going on, have some estimates from your contractors, some bids. It's going to take a little bit of work. That's what it takes to get started. Do some work. Get those bids, get that scope of work, get this, get an appraisal, get an inspection, get all these things. Do some data research, do some stuff, you know, and have that packet. And then you make that proposal to people. And now you get people, you pique their interest. Now they start listening to you. Now you don't have to do that all the time. You just have to do it a few times and get established with some people. And they know that you can perform and you can turn out the product that you say you're going to turn out, and you can make the profits, and you can do the things that you say you can do. And if you do that, the next time that you talk to them, you don't have to come with all that. I mean, after you do a few of them, they go, okay, yeah, I trust you. You know what's going on. You've thought about it. You know the market. You know what it costs. You know what it's like to have to manage contractors and manage materials. You get it. Okay. So then, you know, I've had lenders that's dealt with me, and I've been dealing with private lenders since the late 90s, you know, and, they know that people know I've been in the business. I've had people approach me to lend me money. I didn't ask it. And I've had people lend me money, and I've got one lender in particular that we struck up. Me and him talked about it probably 5 years previous to him. And one day we were sitting at the ball field. Our daughters play ball together, um, play softball together, and we were buddies. We just sat around, and he looked at me one day and he said, he said, let me know next time you want to do a flip. I said, oh yeah. He said, yeah, yeah. He said, I'm in. And it thinks, well, 4 or 5 years. What changed? But basically, like a lot of other people, very conservative, and he's been watching. Been watching, been listening, been seeing what I'm doing. And that's what people do out here. That's what I do. And so I always remember that as an investor starting out, or if you've been in the business for a while, people are watching. They're watching your social media. They're watching you out here doing these houses. They're seeing what you're doing. They hear on the street. They hear from the guys at Lowe's, or they hear from a lender, or they hear from an appraiser, or they hear from a real estate agent. So if your reputation is not what it should be, and you're not doing the right things, trust me, people are going to know. Okay. Business owners are another form of lender that you can look at. It's just people that own business. And the reason I say it's people that own business is they may be more inclined to, you know, to loan you money because maybe they borrow money and they deal with money, and so they're more adept maybe than someone that isn't to do those sorts of things. Okay. There's people who have money in self-directed IRAs, which is a whole nother wormhole we can go down. That is, if they have a self-directed IRA, they can they can direct the money and they can lend on a property out of their IRA, without paying taxes. Once again, disclaimer: talk to a tax professional, but people do that. Now, one of the greatest, well, something that's worked for me. I think it's one of the top things, or at least one of the top places to start is um, pawn shop owners. I have a private lender that's been with me for 25 years, and he owned pawn shops. Why pawn shops? What do pawn shops do? They loan money. So there is a probably one of the greatest tips you may ever get from anybody telling you anything about private money is they're used to loaning money quickly on the spot, double-digit returns. And sometimes they got money to loan and nothing to loan it on. They're not getting enough good stuff to pawn on. So, you come along offering, you get a relationship with them, you talk to them, you know, they're watching, they got money to lend, so there's a wonderful spot to start if you know someone like that, and they're familiar with it, you know. Now, when you deal with lenders and, we talked about the packet of information when you're starting out, do all that, you got to do that. Also, make sure you do your title searches. You do, you consult, get attorneys, get title companies involved. Do a deed of trust, promissory note. That's what we do in West Virginia. Give them an insurance policy, that they're the lien holder, lost payee. They're right on everything. All the formal documents are done. Okay, everything's done. I do title insurance. I do it all when I'm dealing with someone else's money, because when you're dealing with other people's money, I mean, it's the church's money. And that's what you got to think about. Nobody wants to lose the church's money. So you do everything in your power to protect that lender from any types of problems that they may have down the road. Okay, that's first and foremost. And so I know I kind of bounced around a little bit, um, but I just want to give you those different avenues of different types of people that may be willing to loan you some money, and how to go about approaching them with some data and a packet of information with contractors and different things. And I think you'll find that your success rate will skyrocket when you start to do those types of things and you look prepared and you do the work up front. I think I think people will take you a lot more serious, you know. And just remember, people are watching. They're watching you all the time in this business. So do the right things and do right by everybody. Every real estate agent, every contractor, everybody. Do the right thing, and word will spread on you, and you'll be surprised at how many people will all of a sudden start to approach you and want to get involved in what you're doing. It really does. It works just like that. So I know I've been rambling on here for a little bit about private money, but Travis, you got any questions or anything you think that our viewers would like to hear about?
And as usual, you gave a lot of value, man, and private money is very important. And I think the biggest takeaway that I got, besides the trick about the pawn shop owners, which is gold,
Yeah.
it's just, you got to make sure that you give that money back plus their return. Like, that's the most important. The private money person gets paid before anybody. The lender gets paid before anybody. You got to make sure that that's done. Before we get off here, could you dig in a little bit more the type of risks that you face when you don't pay that private money back?
Oh gosh. Well, I mean, the biggest risk that you face is reputation. That's your biggest risk is when you can't perform and you overextend. And a lot of people do that. They get overextended, or they get, you know, I see a lot of people buy rentals and do that sort of thing, and they get overextended doing the Burr method. And we'll do a podcast on that one day too. I got all kinds of information, at least my opinions on how all that works. But yeah, I mean, and then you risk that they're going to have to move forward and have to foreclose on you, and of course, you don't want that. Nobody wants anything to do with that. Now, there could be a situation where, let's say, you do a 6-month deal, and then there's some delays or there's some things out of your control that happens. Hey, that's fine. That's fine. Go back to your lender and say, I'm only a little more time. Can we do another 6 months? And now don't go back to them and say, I need another 6 months for nothing.
Yeah.
Go back to them and say, I need another 6 months. I'll give you $500,000. I'll give you another point on the deal or something just to buy me a little more time, because we've run into some problems. We've had to do some, those things happen. And I don't think the private lenders will that, they don't mind that at all. What private lenders don't want to happen, they loan you this money to be passive. They don't want to have to get involved.
Right.
All they want is their money back plus a return. Now, you can negotiate with them. You can pay them monthly, or you can pay them when you sell the property. All this stuff is negotiated, but that's all they want. So don't let the time frame come and go and they haven't heard from you. Now they start to panic, and they're wondering, why isn't he or she calling me? The loan was up. You know, I went by the property and it's not done. Now panic sets in. And you as an investor are probably done at that point. Now you may be able to go out there and get some money from somebody else. I don't know, but you're going to take a hit there from everybody. So, that to me, would be would just be the absolute worst thing. But just talk to your lenders, ask for some more time. You know, they'll give you some more time. They're looking for passive money on that anyway. They're looking to keep that money busy. They want to keep it working for them. So, I wouldn't, and that wouldn't bother me at all. But yeah, that would be the procedure for them is they would have to, notify you and, start a foreclosure process. I mean, once you got into it, several months. And I have seen it happen and the lenders basically ghost them and they have to foreclose, take the property back and do all that. So you know, that's not what we want to happen in this business, because when it comes right down to it, people loan money on you. They loan it on you and what you're about and what kind of person you are and are you a stand-up man or woman and you can execute and do what you say. Okay, that's what this whole thing's about, you know. And so do what you say. Stand up, be a stand-up man or woman. Things ain't going the way they're supposed to go. Talk to them. Throw yourself on the sword, so to speak, and keep going. And I think you'll have a good relationship with them even at that because they know, hey, they were straight up with me. They told me everything. Okay, that it's that simple. So, um, in closing, I just want to remind everybody, we're not selling anything on here. We're not trying to sell you a service or sell you a program or sell you anything, right? So if you would subscribe and share our videos, if you see our reels or anything like that, if you could share, send them out to people that, and maybe if you're members of real estate groups or local groups or whatever, share it and, you know, content's free. We're doing this stuff for free, just trying to put it out there for small market investors all across the country. What we call small market is under 300,000 people in your total market area. So, that pretty much encompasses all the small towns and stuff, around the country. We're around the Charleston, West Virginia market, so we're a little bit under 250,000 people. So we hope you enjoyed our content. And in closing, we appreciate you watching and tune back in every Thursday. 2 p.m. is when we release our podcasts every week. Thank you for watching.